some of the details on those measures have not been released yet. So we kind of just know about them in vague terms. Is this too little, too late in terms of the damage that the rout has already done?
Probably. And I think, there are basically three large areas of leveraged ETFs: US listed, Hong Kong listed, and now Korean listed. And they've only really been listed in Korea since around May, and we've seen a huge amount of money go in. So we started off the beginning of the year with not that much in these leveraged ETFs, and we peaked at about 55 billion, and now we're about 26 billion. I think the Korean regulations are more about the amount of money you put down initially. That will continue to go up, and also about the amount of diversification in your portfolio and maybe education for investors. But it won't stop the leveraged ETFs in the US and in Hong Kong. So I think short term it's going to help, but I don't think it's the main stabilization of the market.
And let me, I think that the leveraged ETFs have been a little, stigmatized here, because at the end of the day, what's going on in Korea is just that there's these two stocks there that are so coveted because of AI, right? People have figured AI is going to grow. It needs memory. These two stocks are basically white hot. Talk about the underlying market a little bit. I know that leverage only adds a little fuel to the fire, but generally those two stocks, how do you see them and play them? Like, as you're an active manager buying and selling stocks there, do you overweight SK Hynix and Samsung or underweight them? What's your take there?
Well, actually, beginning of July, having had an incredible run, we've taken our positions down in Korea within our global emerging market and Asian strategies. But obviously, we've kept them within our Korean strategies. What we've done within our Korean strategy is widen out, is go for stocks that had, either a derivative of them, like a holding company that had some other angle, that had the potential upside of those two companies, but another angle in terms of value up, or companies that own stakes in those two companies in Korea, which, for instance, one insurance company in Korea is going to double its earnings this year because of its dividend it's going to get out from one of the two largest holdings. So we've been a bit more nuanced on it. But the fundamentals are incredibly strong. We've had Korea trade for years at a discount. And that discount was to do with corporate governance, and it was to do with cyclicality. Now the market's beginning to price these top two stocks, the semiconductors, the memory plays, as structural stories. And one of the most positive stories there is that the sort of 27, 28, 29 earnings haven't really been factored in. They're still looking like single digit. But clearly, if the AI capex continues, they're going to be much, much higher. So our view is fundamentals are very sound. The results recently show that. But the leverage in the market and the positioning really got a bit too hot. We're taking a pause. Maybe we have another month of pause. It's quite hard to tell. Maybe the regulator, helps that.
Right.
But ultimately, we would be looking. We like the story. I mean, it's good earnings, and also, the supply chain around it, we think, is very, very positive as well.
Right. Sean, Korea has a very concentrated market. These two companies, SK Hynix and Samsung, make up half of the KOSPI, the benchmark index. There's high retail participation in this market as well. Is that unusual? I mean, maybe in the US it is, but is it unusual across Asia? I feel like Taiwan might, kind of qualify as well, with TSMC making up such a big chunk of the TWSE.
Yeah, I mean, interestingly, you go back to, say, Taiwan, that's always been the case, but actually, Taiwan Semiconductor has always actually been quite a defensive stock relative to Taiwan, where, it's obviously the opposite in Korea. Look, Scarlet, we've had this phenomenon where the stocks have done incredibly well in the last year or two. Even after the correction, the market's up 100%. These stocks are up even more. So obviously they've got larger because of that. But the interesting thing about Korea, it's not the only angle. One of the angles we like, which the market is ignoring, is the industrial angle. So if you take those, the market at the moment is under 5 times earnings, and that's really driven because of the semiconductor stocks. If you take the semiconductor stocks out, the market's still at 9 times earnings, which is at a discount, obviously globally, particularly to the US, but a discount to Asia and other emerging markets. But the earnings have been revised up from about 6-7% at the beginning of the year to over 30%. And next year's earnings is the same, and the year after. So I think we're having multiple drivers in Korea, and that's what's really interesting. But the narrowness of the market hasn't been as extreme as this.
Got it.
Ever. But the retail investor has been as active, because many years ago, the retail investor was very active in small cap.
Right.
Those companies weren't as strong. So we've got an odd situation here where the retail investor is obviously very leveraged, doesn't always get its timing right.
Yep.
International investors have actually sold $140 billion of Korea since the beginning of 25. But at least the fundamentals of these companies are strong, unlike some of the small caps.